Hi, in this presentation, I will be taking you through the preparation of manufacturing accounts. Manufacturing accounts. What do we mean by the manufacturing accounts? Manufacturing accounts is the account prepared by the organization that deals in the production of goods for sales. Accounts prepared by the organization that deals in the production of goods for sales is said to be the manufacturing accounts. I repeat, manufacturing accounts is the account prepared by the organization that deals in the production of goods for sales. What are the purpose of manufacturing accounts? Purpose or reasons for preparing the manufacturing accounts. The following are the reasons for preparing the manufacturing accounts. Number one, to ascertain the cost of production. To ascertain the cost of production. Number two, to ascertain the manufacturing profits or loss. That is, to ascertain the profits or losses on manufacturing. To ascertain the profits or losses on manufacturing. These are the primary reasons for preparing the manufacturing accounts. So, now remember I've told you that we prepare manufacturing account to ascertain the cost of production. What do we mean by cost of production? These are the total cost of goods produced. The cost of goods produced is said to be the cost of production. I repeat, cost of production are the cost of goods produced to date. The cost of goods manufactured to date are said to be the cost of production. The cost of production have two elements. Cost of production have two elements. Number one, prime cost. Number two, factory overheads. Prime cost and the factory overheads. What do you mean by the prime cost? Prime costs are the direct cost. The simple definition of prime costs are the direct costs. Prime costs, I repeat, they are the direct cost. While overhead costs are indirect costs. Indirect costs are said to be overheads. Meaning that to ascertain the cost of production, you are going to sum up your prime cost and your factory overheads. That is, you sum up your direct cost and indirect cost. The sum up, that is the total of both the direct cost and indirect cost, are said to be the cost of production. Now, direct costs are the cost of items that can be traced directly to production. The cost of those items that are directly traceable to production are said to be the direct cost. Therefore, direct cost is the aggregate of three elements. The aggregate of direct materials, direct labor, and direct expenses. That is the direct cost. Meaning that prime cost is the aggregate of, aggregate means total. That means prime cost is the total of direct materials. Total of direct materials plus direct labor plus direct expenses. When you add the three elements together, The total of these three elements is the prime cost. The total of these three elements are the prime cost. I've told you that prime cost is the total of the direct materials, direct labor, and direct expenses. While indirect costs, I've told you that they are the overhead costs. And I've told you that overheads are the total of indirect element, that is indirect materials plus indirect labor plus indirect expenses. When you add these three elements, the total of these three elements are overheads. I've told you that overheads are the indirect cost. That is, when you sum up indirect materials, indirect labor, and indirect expenses, that will give you the overheads. That is factory overheads. But direct cost, that is prime cost. Meaning that to get your cost of production, you have the prime cost plus the factory overheads. Now, there are three types of inventories in manufacturing. Types of inventories. There are three types of inventories. Number one, we have inventories of raw materials. Then we have inventories of work in progress and inventories of finished goods. So, if you are in secondary school where you have inventories, so they might use stocks for you. Stocks is the same as inventories. So, inventories of raw materials. I want to start with the number one. Inventories of raw materials. What are raw materials? Raw materials are the substances from which goods are produced or manufactured. I repeat, raw materials are the substances from which goods are manufactured. Example, for a Bonvita manufacturing company, their major raw material will be cocoa, because cocoa will be used in the production of Bonvita. Then for bread baking company, their major raw material will be flour, because flour will be used in the production of bread. Therefore, those are raw materials. I've told you that raw materials are the substances from which goods are manufactured. Number two, we have inventories. Inventories of work in progress. Work in progress. These are the inventories. These are the stores of a partly manufactured goods. They are the inventories of a partly manufactured goods. They are the inventories of a partly produced goods. That is, goods that have not reached their final stage of production. Goods that have not reached the final stage of its production. That means the work is still in progress. They have not been produced completely. So, that is work in progress. The third one is inventory of finished goods. Finished goods are goods that have reached their final processing stage. That means these goods are ready for sales to the customers. That is, goods that have reached their final processing stage. That is inventories of finished goods. Now, remember I told you earlier that the cost of production comprises the prime cost and the factory overheads. And I've told you that the prime cost is the aggregate of the direct materials, direct labor, and direct expenses. In short, prime cost are the direct cost. So I want to start with the direct materials as a component of the prime cost. What are direct materials? Direct materials. I've explained that direct costs are costs that can be traced directly to production. Therefore, direct materials are the materials that can be traced directly to production. In other words, direct materials are the materials that are used up in the production process. The materials that are used up in the production process are said to be the direct materials. So, to ascertain the value of the direct materials, so you have your raw materials. So you start with the opening inventory. Opening inventories. That is opening stocks. Opening inventories of raw materials. You add purchases of raw materials, if any. You add purchases of raw materials. Then you add carriage inwards of raw materials. Carriage inwards. Another word for carriage inwards is carriage on purchases. Then you less return outwards. Less return outwards. Return outwards on raw materials. You have this. By the time you less that, you have this. If you add this to opening inventories, you have this as the value. This is raw materials available for production. Raw materials available for production. Now less closing inventories. Closing inventories of raw materials. Now get raw material used. Raw materials used or raw materials consumed. So this is the value of your raw materials that will be included in manufacturing accounts. That is, you start with the opening inventories. This is the inventory in hand at the beginning of the period. The materials in hand at the beginning of the period, that is the opening inventories. And when that is not enough for you, this is not enough for you for production, then you have to purchase more, you have to buy more. That is why you have purchases of raw materials, you add it to it. Then the cost of bringing these goods bought down to the site, that is the carriage inwards, you add it to the purchase. Then if any of the item purchased is later returned, you have to subtract that. Then when you add this to the opening inventories, you get your raw materials available for production. Before you deduct your closing inventories, you get your raw material used. This is your direct materials. Remember, I've told you that cost of production, I've told you that it comprises 1. The prime cost plus the factory overheads. Factory overheads. By the time you add your factory overheads to prime cost, you get your cost of production. And I'm telling you that this prime cost, I say, is divided into three. Number one, we have direct materials. Number two, we have direct labor. And number three, we have direct expenses. I've explained the direct materials. I've explained it. Now, we have the direct labor. Direct labor. Direct labor is the wages of the productive staff whose effort can be traced directly to production. Direct labor is the wages of the staff whose productive effort can be traced directly to production. After the direct labor, the next component of prime cost is direct expenses. Direct expenses. Direct expenses are the expenses that can be traced directly to production. Those expenses that can be traced directly to production are said to be the direct expenses. Direct expenses are the expenses that can be traceable to production. Example of direct expenses is royalty. Royalty. After the direct expenses have been considered, that means I've told you that prime cost is the aggregate of the direct materials, direct labor, and the direct expenses. The next item is factory overheads. What are the overheads cost? Factory overheads. Factory overheads. Overheads are indirect costs. Indirect costs. I've told you that overheads is the aggregate of indirect materials, indirect labor, and indirect expenses. The aggregate of indirect materials, indirect labor, and indirect expenses is said to be the overhead cost. And I've told you that your cost of production comprises the prime cost plus the factory overheads. I've explained the components of the prime cost. Therefore, I want to give the format for preparing the manufacturing accounts. Now, format. Now we have XYZ Limited. Let's assume this is the name of the company. We have manufacturing accounts for the year ended December. Let's assume the year end is December 31st, 20XX. So, I've told you that the first thing, what you want to ascertain is the cost of production. And I've told you that the cost of production have two elements, two components, the prime cost and the factory overheads. Now you want to ascertain the prime cost. I've told you that the prime cost comprises the direct materials, direct labor, and direct expenses. Therefore, we want to ascertain the direct materials. I've told you that the direct materials can also be called the raw materials consumed or raw materials used. So now let me use raw materials. So we want to ascertain the direct materials first. So we have opening inventories. Opening inventories, that is opening inventories of raw materials. Opening inventories of raw materials. Then I've told you that if this is not enough, the one you had as at the beginning of the period, if it is not enough for production, then you buy more. Then you add the one you buy to it. You now have add purchases of raw materials. Purchases of purchases of raw materials. So when you add the purchases, if you incur some expenses in bringing the goods bought to the site, those expenses incurred in carrying those goods will be added to the purchase. So we add carriage inwards. Carriage inwards. I'm told you that carriage inwards can also be called carriage on purchase. Now let's assume after these goods have been brought to site, you discover that some of them are bad or they are of wrong color. So what will you do? You return them back to the suppliers. The goods returned to the suppliers have to be deducted from the purchase since it is no longer part of the goods bought, since they have been returned back to the suppliers. So let's return outwards. Another word for return outwards is returns on purchase. By the time you less that from your purchase, the net purchase now, you add it to the opening inventory you have at the top. So you have the raw materials available. Raw materials available for production. Available for production. Then from this, you now less the inventory in hands. Inventory of raw materials in hands as at the beginning, as at the end of the period. You let the inventory in hands, inventories of raw materials in hands as at the end of the period. So less closing inventories of raw materials. Closing inventories of raw materials. By the time you less this, you get your raw material used. Raw materials used in production or raw materials consumed. You either call it raw material used or raw materials consumed. Now, this is your direct material. You have ascertained. By the time you get your raw materials used or raw material consumed, that means you have got your direct materials. And I've told you that prime cost have three elements. Prime cost have three elements. Number one is the direct materials, which is the same as raw material consumed or raw material used, you have ascertained. Then the next one is direct wages or direct labor. So we are going to add direct wages. You add direct wages or direct labor. Then you add direct expenses. And I've told you that example of direct expenses is royalty. If any, you add it. After adding this, then you get your prime cost. Prime cost. That means you have considered the direct cost. That is your direct materials, which is raw materials consumed or raw material used, plus direct wages, plus the direct expenses. That gives you the prime cost. After your prime cost, the next element is the factory overheads. Factory overheads expenses. I've told you that overheads are indirect cost. So, indirect cost, that is overheads. Examples of factory overheads are factory rent and rates. Factory rent and rate. Factory power. Factory power. Factory power. Then we also have factory repairs. Factory repairs. Factory repairs. Then we also have factory insurance. Factory insurance. Factory insurance. Then we also have supervisory wages. Supervisory wages or supervisor's wages. Then we also have the workman's salary. Workman salary. So we also have, you may also have directors. We have factory light and heating. Factory light and heating. Then we also have the general factory expenses. General factory expenses. And you may also be given the assets that may be used at site, and where you are given machinery used at site. That machinery may be depreciated. The depreciation of factory, plant, and machinery will also form part of the factory overhead expenses. So we want to consider the depreciation of factory plant, depreciation of plant and machinery. Now we have depreciation of plant and machinery. Then, if there are, let me say, other factory expenses, any other factory expenses, those expenses incurred at site, you are going to aggregate that. So by the time you sum up all the factory overheads, so let's assume this is the total. After all the factory overheads have been summed up, then you have this as the total. Then this total factory overheads will now be added to the prime cost calculated. You now add it to the prime cost. I'm talking about prime cost and the direct cost. You know, these are the factory overheads. So when you add it to the prime cost, then you have the total work cost of production. Then, in case you have the work in progress, you add opening inventory of work in progress. Work in progress. You add the opening inventory of work in progress. Then now less closing inventory of work in progress. By the time you less the closing inventory of work in progress, you less the cost, you get the cost of production to be transferred to the statement of profit or loss account. And if you are at the beginning stage, you get the cost of production to be transferred to the trading account. So then you may be given the manufacturing profit, that is a percentage markup or margin may be given. You now add profit marked up. You add a profit marked up, if any, you get the transfer price. Transfer price, that is amount to be transferred to the statement of profit or loss account. That is the format for preparing the manufacturing account. That is the format for preparing the manufacturing account. So this format, you have to understand the format and the layout of the format. Then the next thing is I want to solve a work example. Now let's take the example. From the following details, you are required to prepare a manufacturing account for the year ended 31st December 20XX. Amount in dollar. You have inventories as at 1st January 20XX, we have raw materials 5,000, work in progress 3,000, finished goods 7,000, purchases of raw materials 50,000, manufacturing wages 15,000 naira. We have royalties of 1,000 naira, $1,000. Carriage inwards on raw materials $2,000. Fuel and power $170. Factory insurance $330. We have depreciation of plant and machinery of $1,750. Delivery van of $250. Office equipment of $300. Then we have advertising $1,050. Salesman commission of $60. Then we have sales of $200,000. Delivery van expenses of $1,200. Supervisory wages of $3,000. Then we have inventories as at 31st December 20XX. We have raw materials of $4,500. Work in progress of $2,300. Finished goods of $4,600. That is the question. We therefore want to profile solution to the question. What is the name of the entity? The name of the entity is not given. We were told from the following details you are required to prepare a manufacturing account. So where the name of the entity is given, the first thing to start with must be the name of that company or the name of the entity. So the first thing will be the name of the company. As I've said, you have XXX. After that, I'm assuming XXX as the name of the company since it is not given in this question. So you have manufacturing account, manufacturing account for the year ended December 31st, 20XX. So that will be your heading. The amount is in dollar. So I've told you that you want to ascertain your prime cost. And I've told you that your prime cost and direct cost. The first component of prime cost is direct materials, which is the same as the raw material consumed. So I've told you that to ascertain that, you start with the items of raw materials. So we have raw materials, then we have opening inventories. Opening inventories of raw materials. Opening inventories of raw materials. Back to the question. You have inventories as at 1st of January 20XX. Raw materials. Since it is as at 1st of January. 1st of January is the beginning of the accounting period. So inventory as at 1st of January 20XX is 5,000. That is for raw materials is 5,000. So the inventories, the opening inventories of raw materials is $5,000. So you put that here. So opening inventories of raw material, $5,000. Then we add purchases. Add purchases of raw materials. You add purchases of raw materials. Back to the question. You have the purchases of raw materials and that amounted to $50,000. We have $50,000. Then you put it, $50,000. Then back to the question. You have, after purchases, you have manufacturing wages, royalties, carriage inwards on raw materials. I've told you that another word for carriage inwards is carriage on purchase. And the carriage inwards should be added to the purchases. So we are going to add this 2,000 to the purchase. So we add carriage inwards, that is carriage on purchase, which is 2,000 of raw materials. Now, when you add 2,000 to 50,000, then you have 52,000. But let's check if there is returns. Back to the question. So after carriage inwards, we have fuel and power, factory insurance, depreciation, advertising, salesman commission, sales, delivery van. So there is no returns. If there is returns outwards have to be subtracted from it. But since there is nothing as such, so we just add 50,000 plus 2,000, that will be $52,000. When you add the 52,000 to 5,000, then you have $57,000. This $57,000 represents raw materials available for production. Raw materials available for production. After raw materials available for production, the next thing is to less the closing inventories of raw materials. Less closing inventories of raw materials. The inventories, that is stocks, as at the end of the accounting period. Remember, the end of the period is December 31st, 20SS. Now let's look for the inventories of raw materials as at December 31st, 20XX. Now back to the question. Now you have inventories as at 31st December 20SS. We have raw materials, that is 4,500, work in progress of 2,300, and finished goods of 4,600. So the closing inventories of raw materials is 4,500. So you now less the 4,500 from 57,000. When you subtract 4,500 from 57,000, then you'll be left with 52,500. This 52,500 represents the raw materials used. Raw materials used. I've told you that you can call it raw materials used or raw materials consumed. Now, this amount represents the direct materials. After the direct materials, remember I've told you earlier that the prime cost comprises three components. Prime cost have three elements, which are the direct materials, direct labor, and direct expenses. Direct materials have been ascertained, which is raw materials used, of 52,500. The next thing to consider is the direct wages. And now back to the question. Now look for direct wages in the question, and they might call it manufacturing wages or factory wages. So whichever one you have in the question is the same as your direct wages. Now back to the question. So we have manufacturing wages of 15,000. This is our direct wages. We are going to add direct wages. Now let's add direct wages of $15,000. Direct wages of $15,000. Now, after direct wages, remember I've told you that prime cost comprises the direct materials, direct wages, and direct expenses. We have considered the direct materials and direct wages. The next thing is the direct expenses. Now back to the question to see if there is any item of direct expenses. Remember I've told you that direct expenses, examples of direct expenses is royalties. Now back to the question to see if there could be any direct expenses in the question. Now we have royalties. Royalties of 1,000. So this is direct expenses. So we add our royalties of 1,000, which is our direct expenses. By the time we add, that is 52,500 plus 15,000 plus 1,000, then you have 68,500. This 68,500 represents our prime cost. I've told you our prime costs are the direct cost. Now, having ascertained our prime cost, the next thing is to ascertain our indirect cost, which is factory overheads. Now we have factory overheads expenses. Factory overheads expenses. Now back to the question and try to identify those expenses that are indirect that relates to the factory. Now back to the question. Now the first item in the question is the inventories, which shall be considered. Purchases of raw materials have equally been considered. Manufacturing wages have been considered. The royalties have been considered. The carriage inwards of raw materials have been added to the purchase, which have been considered. Then we have fuel and power. Fuel and power of 170 is an overhead cost. So we have fuel and power of 170. Fuel and power of 170 is an indirect cost. Back to the question again. Then after fuel and power, the next item is the factory insurance. Factory insurance of 330 is also an indirect cost because it attracts factory. But if you see insurance in the question, you know that it is an administrative expenses. But because this one carries factory, so that is why it will be treated as an overhead. So we have factory insurance. Factory insurance of 330. Factory insurance of 330. Now back to the question. You have depreciation. Depreciation, we have plant and machinery. It is believed that plant and machinery will be used at the site. Plant and machinery will be used at sites for production. Plant and machinery will be used at sites for production. Therefore, depreciation on plant and machinery will be treated as part of the factory overheads. Now we have depreciation on plant and machinery of 1,750. Now, depreciation of plant and machinery, which is 1,750. That should be treated as part of the factory overheads. Now back to the question. You have depreciation on delivery van. Delivery van is an asset used to transport the goods to the customers. Since this delivery van will be used to transport the goods to the customers, that means depreciation on delivery van is a selling expenses. Since it is a selling expenses, it should not be treated as part of the factory overheads. Now, depreciation of office equipment. So this also, since it is an office equipment, not a factory equipment, so the depreciation of office equipment should be treated as an administrative expenses. All office expenses should be treated as an administrative expenses. So this should not be treated as a factory overhead because of the word office. Now, advertising is the amount incurred in creating the awareness of the goods into the notice of the customers. Therefore, an advertisement expenses is a selling expenses. Therefore, it should not be treated as an overhead. So, salesman commission. The commission given to the agent who sells the goods. Therefore, the commission given to them is a selling expenses. So, since it is a selling expenses, it should not be treated as a factory overhead. The next item is sales. Sales is the revenue, and that revenue should be used in the statement of profit or loss. And if you are a beginner, it will be used in the trading profit and loss account. It will be used in trading accounts, so not an overhead. Then delivery van expenses. This is also an expenses incurred in delivering the goods to the customers, in sending the goods to the customer, in dispatching the goods to the customers. Therefore, this is a selling expenses. Therefore, it should not form part of the factory overheads. Then we have supervisory wages. This is the wages paid to the worker that supervises the work at the site. Therefore, this should be treated as a factory overhead. So, you have supervisory wages of 3,000. So, to be treated as a factory overhead. So, supervisory wages of 3,000. That is factory overheads. After the supervisory wages, the next item we have are the inventories. Inventories are the last item in the question. So, we have inventories. So, these are the overheads we have. So, we have 170 plus 330 plus 1,750 plus 3,000. Therefore, our factory overheads is totaled 5,250. So if you now add the 5,250 to 68,500, then you have the total to be 73,750. 73,750. That is the work cost of production. Now back to the question. Then you have the inventories. You have the work in progress. Remember, I've told you earlier that the inventory in manufacturing account can be divided into three: the inventories of raw materials, inventories of work in progress, and inventories of finished goods. I've told you that the inventories of raw materials and inventories of work in progress will be used in manufacturing account, while inventories of finished goods will be used in the statement of profit or loss account. So now, inventory of work in progress, opening inventory is 3,000. We are therefore going to add the opening inventories of work in progress. So add opening inventory of work in progress. That is 3,000. If you add the 3,000, then you have 76,750. Then you also less the closing inventory of work in progress. Now back to the question. You have inventories as at December 31st, 20SS. Work in progress, that is $2,300. So you less the 2,300. By the time you subtract 2,300 from 76,750, 76,750 minus 2,300, then you have 74,450. That will give you the cost of production. Cost of production. That is the solution to the question. My next presentation shall touch the preparation of a complete financial statement involving manufacturing accounts. That is the preparation of manufacturing accounts, the statement of profit or loss, and the statements of financial position. Thanks for watching.